Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Wells Fargo is expected to announce a dividend cut when it announces earnings tomorrow on July 14th, but many are wondering how much will it cut dividends and how will this impact investments in its stock? Joining me to discuss is Garret DeSimone. He's the head of Quant option metrics to discuss option sentiment and if it implies that investors have already priced in dividend cuts ahead of earnings. Garret, it's great to have you back with us. Welcome to Trade Talks.
Hi, Jill. Happy to be here.
All right, now Garret, tell us what your research is saying and why it's different than other sell-side analyst reports.
Sure. So a little bit of background on implied dividends. They're extracted from option prices, and they're contrast to what a sell-side analyst would predict in the sense that sell-side analysts typically look at accounting statements such as net income and figure out what kind of liquidity level the bank would need to maintain. If we look at option implied measures such as the implied dividend, these are taken directly from the options market and what market makers think the future dividend stream will be for a company.
What else has this data been able to price in?
So it actually has a long history of being able to predict cuts, increases, and even dividend initiations. When we look at the Wells Fargo case, however, typical sell-side analyst estimates of the dividend cut range from 25% to 50%. When we use the option metrics, option implied model, we get a level far higher than that Wells Fargo is predicting about a 60% dividend cut.
All right, now you have a couple of charts here to share with us. Walk us through those.
Sure. So if we look at this chart here, this is the rolling average of the estimated implied dividend for Wells Fargo. So there's two interesting points to note. The first one being the projected dividend since the beginning of May in this chart is at 20 cents, which is significantly lower than the past dividends paid. So we know it's going to be lower. The second interesting point to note is that this projected dividend was estimated as lower far before the Fed came in with their new set of capital restrictions. So the option market had actually priced in a dividend cut long before the Fed had announced these new regulations for the banks.
And Garret, when you take a look at this data, there's other volatility events and other stocks that you can look at. It's not just specific to dividends on banks. You can use it for a whole number of scenarios.
That's correct. So you can use another measure we look at is the option implied earnings move prior to the earnings announcement. So this is a unique example where the dividend is also announced with the earnings, but in a lot of cases you may get a dividend cut that's outside of the earnings. So there's two really important news components here, and we can look at what the markets are expecting in terms of post-announcement movement in the underlying stock from the earnings news.
All right, so if we look at this more from a macro level and we talk about how earnings announcements have been priced in, how dividends have been priced in, a big narrative is that the market performance is really disjointed from what we're seeing in the economy and what's happening on the ground. Do you think that some of this could have been seen if we were to look at options data more so than just balance sheets?
I agree. And the nice thing about options data is it does give us a forward-looking measure. And what we've seen from these implied volatilities, which is the expected volatility in the future for the underlying asset, is that these volatilities remain elevated while this rally has been sustained over a 3 or 4 month period. So this is a big contrast to what we've seen in previous rallies where you'd expect volatility to rapidly decrease as the market rallied. But in this case, volatility has stayed elevated.
All right, Garret, thanks so much for joining us on Trade Talks.
Thank you for having me, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.